Welcome back. You're with us here on the Samvat Special Editors Roundtable, and of course, we have been graced by Madhu Kela and Sunil Singhania, who've been talking to. What we'll do in this segment is basically talk about three names. We'll talk about Divis Laboratories, JSPL, and Bajaj Finance, and ask them how they identified these businesses and what are the learnings they had, while holding them. How did they decide to sell, and any regrets whatsoever. So that's a disclaimer. This is purely for educational purposes, and this should not be construed as an investment advice. So having said that completely and clearly, Madhu,
absolutely.
Divis Laboratories, let's start there. And start with that extremely interesting story of how you met the management for the first time.
Have you made an effort to meet that management?
Yeah. So, it's in those days, it was not very easy. So I literally had to travel in a flight, get a ticket next to him, and show him that I have no business going to London. I have just come to meet you. Dr. Divis, right? And then, of course, we had a great conversation about his passion, etc. And that was a really deciding factor.
What year was this?
This was 2003-04.
Okay.
Very
What was
early
the
in
market
our
cap
life.
then?
Market cap was 140 crores.
140 crores.
At the listing price.
Okay.
So Nimesh, we are all talking about learning, and we'll talk very freely. Diwali hai. See, one of the most important learning which I have about mid-cap and small-cap company, there are real multi-bagger and there are transitory multi-baggers. A lot of time we confuse between the two, right? Even the transitory multi-baggers, where they go up 2, 3, 4x, 5x, we start to believe that this is going to last forever. And sometimes the real multi-bagger look like a transitory multi-bagger and we end up selling them. So let me just tell you, you think I'm smart, I think I'm not. Because if I was smart, if I'd put only 10 crore rupees of my personal money in Divis, only 10 crores, and just left it, and whatever dividend which I got, I would have invested in Divis only, nothing doing. My money would have been 1800 times.
Wow.
How much? 1800 times.
So 18,000.
So that 10 crores would have become 18,000 crores.
And to think of
So
it, Madhu.
all 20 years I've worked, I've actually eroded wealth.
That was a fascinating story.
It is a frank admission.
No,
Right?
Madhu, the reason I say that is because it was an OFS. It was not even an IPO.
Yeah.
I had done that off the charts, and I had spoken to you about
PE,
it.
I think Kotak
And
was selling.
it was the OFS investor had made 4x or 5x.
That's right.
You think 4x or 5x is good, but after that you missed out on the next 1,000.
They actually made 14x because they bought the share at 10 rupees. They sold it at 140 rupees.
Yes.
And then we bought it at 200 rupees in the fund. So again, just look at it. The fund bought it. We both have left. You look at the portfolio of Nippon Fund, they are still holding Divis Lab.
Yeah. Correct.
And that is the benefit of long-term investing and a portfolio construction.
So, there's an important lesson here, right? You know when to buy sometimes, but you don't understand when to sell. So,
Sonia, the
Sunil,
important
what is
lesson is when you, just want to finish.
Sure.
The important lesson is when you really find a great company, that time you have to just ignore the noise from the market. You have to ignore. Divis would have fallen more than 50%.
Absolutely.
Maybe 10 times in this journey between 2004 and 2022-23.
Just
Even
2 years
again, it
back.
has fallen
Just 2 years back.
5,500 to,
Yes.
3,500,
In
3,500.
2016 it halved.
So my friend, philosopher and guide, Rakesh Bhaiya, used to tell, it is so difficult to hold your conviction when the stock falls 50%. And that is what made the difference. He had the conviction to hold Titan. When the stock fell more than 50% so many times in his journey. So what the real lesson is, A, these are very few opportunities. B, you have to have all the conviction before you invest. C, you should be able to monitor that company well. And D, and the most important, you should have the stomach to digest the volatility.
And E, do whatever it takes to meet management.
That's the big
Madhu,
learning, right?
I also believe that you used to also book a hotel, the same hotel where the US FDA officials were traveling. So that, if there's some inspection going on, you can find out, what's happening.
It was not inspection. So, this management was extremely tight-lipped. And they will never ever utter one single word about, who their clients are, this, that. So obviously, we were also analysts, we will not give up. So we will go to the hotel where the clients were staying and we'll find out.
But that's the other big difference, right? Now we take data because it's everywhere, it's easily accessible. But this is a time when, I mean, it was hard to come by.
You
So
could have been in a secret service in another time, another life.
Today also, Sunil and me would do the same.
yeah.
We will talk about what we are doing today, maybe 20 years later. But today also, if there is a great idea, we will not leave it like this. And hopefully now, if we get a really great idea, hopefully we can hold it for 10, 20 years.
All right. So that's about Divis. And Madhu, if I remember correctly, you took that flight and the next flight you took and came back as well.
Yes,
You had no
absolutely.
business going to London.
Nothing.
It was just to
Absolutely.
meet the management. All right.
Absolutely. Yeah.
But Sunil, now before we went into the earlier break, you mentioned briefly about JSPL. In the last few years, it's taught investors or traders a lesson that they'll never forget at times, because the management, we have a bit of an issue with selling various assets as well. But you all got in when it was a very, very, niche market, very small. It made its way into the Nifty, and it grew big time as well.
I think Madhu touched upon that. There are some multi-baggers which are transitionary and some which are, perpetual. I think by the very nature, these businesses, which is steel and to some extent power, they tend to be cyclicals.
Yeah.
So I think I remember when we bought JSPL, it was actually not a company which got listed or which was set up. It hived off from another Jindal Group company as a hive off, and the small company was handed over to Naveen Jindal. And I remember first time when I met, he was cleaning his gun. So, I said, "Ye to sala promoter banduk leke baitha hai." And then, he was a very sportsman. And I think people used to get a little bit hassled because of their huge expansion and capex program. Even now when you see, a lot of investors say that bahut capex kar raha hai, we don't want to invest. But if everyone starts to think like that, then the country is not going to grow. So I think that was a company which believed that having in-house resources made sense. And in those times, iron ore was like sand. You could buy it for free, only transport cost. But still that company had the foresight of having their own iron ore blocks, their own coal blocks. They were the first company to set up a merchant power plant. It was a new thing. No one used to set up a power plant without having a PPA. They took the risk of setting up a merchant power plant. And I think it all worked out.
Yeah.
But obviously these businesses are transitionary. And then India went through that, in between issues about taking back the mines and all.
Yeah.
So it was a mix of a few things which led to this whole sector facing a lot of issues. But I think we
But you were lucky to exit on time.
we made a lot of money.
Let me just add 2 points. We actually bought JSPL at 300 crore market cap. Then we must have sold our last shares maybe at 40,000 crore market cap.
Wow.
Then it went to 90,000 crore market cap. 85 or 90,000 crore market cap in a matter of maybe 6 or 12 months. And 15 years later, that company was available for again 4,500 crore market cap. So see, for a lot of your viewers who are seeing that, is the India story done? So this is what the stock market story is, and this is what the India story is. That you could buy something for 300 crore market cap, you could see 80,000 crores, and then 80,000 coming back to 4,500
Now back
crore,
to 30,
and again
41.
back to 45,000 crore.
Okay.
All over again.
That's on.
I don't want to ask about Bajaj Finance because, we were talking about this in the break as to how you regret selling early, right? Why did you sell? I mean, all the boxes were ticked for Bajaj Finance. I mean, great pedigree, strong
I'll
company.
give you a little bit about Bajaj Finance. So, this was just after Lehman. I think Bajaj Finance was a business which was there. I think even the promoters had forgotten that there is this company called Bajaj Finance in their stable. It used to be just an in-house two-wheeler financing company. And those days, the resale value of Bajaj scooters used to be very less. So their NPAs used to be 30-40%. Because if you did not repay, you were saddled with a scooter which would sell at maybe 30-40% of the price. But it was very cheap. It was cleaning up. We bought it at like 0.3, 0.4 time book. And post-Lehman, to make any kind of money was like, Diwali, as we say. And it very quickly went up like 4-5x. And that point of time, we thought that one-time book, 1.5-time book is all it could get. We never expected the company to grow at 40% CAGR for another 15 years, and the book going from 1.5 to 8 times. So I think, as you rightly said, it's not only about buying, but it is sometimes also about holding stocks. But you know, all this is in hindsight. In some companies like Jindal Steel and Power we sold, it worked. It is possible that if nothing of that sort would have happened, maybe this company would have been much larger. In some companies it did not work. In fact, even in Eicher Motors, we were very early to buy and very early to sell.
You know, I have a question to both of you. Why could we not have a second Bajaj Finance? I mean, if, you know, what is it that Bajaj Finance did so differently and is still doing so differently? And when it's you know, when everyone can see that, you know, something like this can generate so much ROE and can be given 8 times price to book, why has we not been able to get a second?
We have a few which we feel will be the next Bajaj Finance, but we'll know after 10 years.
You're free to tell us.
I would say that, you know, great companies, Anuj, are actually very few. That, you know, great companies are not only about external opportunities. If it was only about external opportunity, then many people actually will create great companies. It's also about leadership, also about risk management. It's also about not doing wrong. So just to digress, we're talking about, see, I was just thinking about, reading about Warren Buffett's success. Actually, if you see, there are only 2 distinct characteristics which I could come up. One is the longevity. That for how many years he has been at this game. That's why the success looks abnormally high. Because if you do it for 70 years and keep compounding, and the biggest thing is that he did not commit a disaster. Let me say he committed many a mistake, but he did not commit a disaster. So companies like Bajaj Finance, you know, they have stayed for a very long period of time, and hopefully the way market is thinking about them, they will stay for a very long period of time. But if you look at last 15 years also, Bajaj Finance may not have committed a disaster. Versus that, if you talk about a lot of NBFC companies, you can clearly pinpoint that this is a disaster, this is a big mistake which was committed.
Okay, well, lots of pearls of wisdom here, but we need to take a quick commercial break. We'll come back and take a look at India's growth roadmap and all that you can watch out for. Stay tuned.